delayed, so I'll go back into it. So this is not just a quick tip; it's kind of a market update. And we again talked to hundreds of dealers all over the country, changing prices. We literally would probably do 20 to 30,000 retail price changes a month between all of our calls and activity we do. So we get really good insight. Be challenged. I'll challenge you to find other vendors or companies in the trenches looking at this retail data. And what I mean by that, actually pulling up cars, narrowing down the competitive set market, looking at price adjustments and photos and descriptions. And not only that, looking at their current inventory flow, but also the market. And there's a few things that we look at in the market, and I've been tracking them. And you may have seen these charts before. I'm gonna share charts here. So if you're listening to this on a podcast, please jump on YouTube or my Facebook to see these charts. But I want to give you kind of a market update, and then what we're looking at over the next 45 and 90 days going forward. Because again, the way I look at it, I want to look at this one day old car as if it was 60 days old car. What's this car gonna look like? Do I want to own it 60 days from now? Because is the market going to get better or worse? Do I hold out on this fresh car, or do I move it fast? Because I definitely don't want to hold it over the next 60 days. So with that, I'm going to show you two charts. The first one's pretty simple. There we go. Now, if you really look at these two charts, these two graph lines here, pretty much go hand in hand. Now, the top one is red. That one's the shopper index, okay? What I mean by shopper index, we use Google Trends, okay, an activity of people looking for used cars, and we map this thing out, okay? Then let me go back into this chart. The second line is our dealers, again, hundreds of dealers all over the country on their 2-week sold percentage. Okay. Now we're looking at 2 weeks. Okay. So directionally, our goal for our dealers would be to sell 50% of their inventory in a 2-week window. So they're on pace to sell 100% in a 4-week window. That's what they're on pace for. So those are the two numbers that I want to first introduce to you. And I'm going to show you some patterns here. One pattern here, and I'm going to move this over a little bit. You can see the shopper index, 54%. There's a little bit of an uptick in around June 25th, the week of June 25th, okay? And so with that activity, within the next week or two, we always kind of see a spike in shopper and sold percentage. So dealers went from a 40% sold percentage to a 46% sold percentage. So after the holidays, or prior to the holidays and going into the holiday weekend, the 4th of July holiday, shopper activity peaked or jumped up. And then within that next week or two, people started buying cars. And again, if you look at this 46% sold percentage, well, again, what that's telling you, our average dealer is on pace to sell 92% of their inventory. Now, that's as of 7/16, okay, 2 weeks. So directionally, if that's a 2-week window, that's basically looking at July 2nd through the 16th. So looks like a lot of our dealers had some good activity for that holiday weekend, okay? And so with that, though, if you notice, the shopper count has dropped from 54% down to 47%. That's a 7% drop in shopper activity. So guess what's going to follow? That sold percentage going to start dropping off, okay? Now, same thing happened back here in March or February 20th here, okay? And the sales followed March 5th, okay? That's that tax season uptick, and the sales followed. But as the shopper count went from 61% down to 49%, so did the sales. Okay, dealer sales went from 56%, meaning they're selling 112% of their inventory, and it dropped down to just 88% of their inventory. So as the shopper goes, so does vehicle sales. So how does this matter? Well, let's look at where we were this time last year. Okay, around July 7th and July 18th, shopper, and pretty much from July 11th through the August 8th was an uptick in shopper activity. And July 11th is that uptick, and that's the week of. So again, 1 week of that, 7 days ago, July 4th and so forth, that picked up. Of course, holiday ended, people got back, slowed down, and then it picked back up. And typically we see a July, August uptick. That's a summer sales event, summer sales-a-thons with new cars. And again, vacation road trips are happening, and they're within a month of kids getting back to school and a life getting busy again. So with that uptick in shopper activity, the sales came, and then they just kind of flattened out at about our average dealer selling pretty close to 100% of their inventory as this shopper index kind of peaked. But after August 8th, again, think about that right now. We're only 2 to 3 weeks away. We're 3 weeks away from our August 8th. Okay. The shopper count just dropped off and it continued to drop through December. Okay. The sales also dropped from 49% down to 40%. That means we're selling only 80% of our inventory instead of 100% of our inventory. So my point here is we're only, here, let's go back the year prior to that. Again, you get this July 16th to August 20th uptick in shopper activity. Sales peaked a little bit. They picked up. But again, 2022 was a little funky. Then it started dropping. Again, sales stayed stable as shopper counts went down. And I say stable because, again, our discipline that we have for our dealers is to, again, carry what they sell and sell what they carry. Don't overstock. And so I think at this window of time, our dealers stay pretty disciplined at not overstocking and just keeping that inventory moving. So that's our goal going forward is, I'm anticipating shopper counts already has dropped. We might get a little bit of August uptick. But here's the thing. I think if anything here, and there's rumors about maybe interest rates dropping in September. So if that's the case, I think this August, September, we get some activity going, but I think it's going to be driven by new cars. If interest rates go down, I think you're going to watch these manufacturers and new cars, their inventory is pretty high. You're going to find these new car manufacturers starting to get better incentives, 2.90%, whatever, 3.9% financing for 72 months. You're going to find they're already happening right now. But if that's the case, which we typically do see that going into these winter months, is an uptick in new car incentives to get the old models out, to get the 2024s out because the 2025s are coming. What's that going to mean for used cars? Well, a lot of people might switch from new to used as they compare pricing or payments, but I think a lot of people will be in negative equity. A lot of people need that lower rate. And comparably, one of the conversations I had with our dealers is it's not so much when you got late model used, like a 2023, it's not so much comparing dollar for dollar for new, saying, well, new would cost, 50 grand and I'm selling it for 40. Okay, great. Or 38 grand. Okay. So you might seem really cheap, but if I can get 50 grand MSRP down to 45 and I can get a 2.9% rate, how does that compare to a 7 or 8%, 9% rate at 38 grand? So it's not just the dollars that you got to look at, it's the percentage of what they could finance, interest rate specials, and what the payment difference could be. And the customer might just be willing to pay that little bit of extra money to go ahead and get a newer model, just to hold on to that a little bit longer. So what that's going to mean, if more people go into new cars, obviously trades are going to come in, and that will also bring down the values of cars as more and more used cars come to the market. So that's what I'd be looking out for over the next 45 to 90 days. We're going to see, and not only that, you throw an election year, right? Just look at the chaos already in this election cycle. And it's going to make a lot of people insecure of where this market's going. And so a lot of people are going to sit on their hands and hold tight just to make sure there's, some stability going forward this year. So, watch for new cars to get some good incentives come August and September. If that's the case, trades will come in. And if the actual shopper activity and sales volumes match what it has the previous years, we're going to start seeing a slowdown and a lull going all the way through December and into January of next year. So that 1-2 day old car that you think you want to hold out and hope, do that selectively. Okay, there are cars. These cheaper cars are harder to come by. Good low miles, cheaper cars are harder to come by. Be selective of what you hold out on, but get 80-90% of your inventory just moving and get it aggressive. And if you'd like to see how LotPop can help you with our LotWalk software and our services of weekly calls, accountability partner, second set of eyes. We get you this insights. We not only use this information, but also how your inventory is moving. We know every day what adjustments you need to make. Is it compact SUVs or 2020s or $30,000 to $35,000 vehicles, and combine that with matching up the leads on those particular segments and attacking those leads or increasing leads, and lead management portion of that. So that's how we can help you, again, stay ahead of this market, give you a little bit more insight on what you can control and match your lot with our Lot Walk products and services. That weekly call is the most valuable thing our dealers get from that. So hope this was helpful. Watch your market. And again, let's see where the next 45, 90 days lead us.